We are living in an era where we are making history. We are living in the middle of economic meltdown, financial meltdown. Of course, these kind of things don't take place overnight. There's a work in process that takes a few years before we can actually see the collapse. 50 years from now, we will look back, or maybe our next generation would look back. We may not be alive at that time. And they will say, wow, the central bank's nasty fiscal monetary policies and the greed had destroyed our nation and the world economy as a whole as a result of their greed and their nasty decisions. Let's dissect that and talk about it and understand why am I saying this. We have noticed that recently Federal Reserve has been, or Jerome Powell has been sounding very dovish. There was a Federal Reserve meeting in Philadelphia this week. It was about 45 minutes long. Of course, I'm not going to sit here and waste 45 minutes of your time, but I will just give you a little insight of what that meeting was all about. In that meeting, Jerome Powell had reiterated that in September, when they mentioned their outlook for going into end of the year, they are going to have few rate cuts. As a result, they did their first 25 basis points rate cut in September, and they had announced that they will have 2 more rate cuts going into end of the year. So October 29th is going to be the next meeting, and in that meeting they will decide whether they're going to do a rate cut or not. So in the meeting that took place this week, Jerome Powell had said that they are going to utilize the same data that they have utilized before, and they have not seen any changes. And he also talked about the balance sheet quite a bit. So what is balance sheet? As I mentioned, if you have watched my videos regularly, I have a series of video on banking, currency, and finance, and I mentioned what Federal Reserve does. They have a balance sheet in which there is no balance, but yet they are able to lend money to the government at a very high interest rate, and then they bail the government out, and they keep doing this every year by printing new money. And he's talking about expanding the balance sheet, or quantitative easing, which is basically the fancy word for printing new money. So what Federal Reserve is going to do is they're going to lower rates for now, and then eventually in 2026 they're probably going to turn their money printer on and print more money, which is going to cause lots of inflation in the economy, which we have been trying to control for the past 2 years. It's a vicious cycle that this Federal Reserve and central bank just keep creating, but they're so greedy that they don't care if it's going to collapse the entire nation, if it's going to collapse the world economy, or if it is going to collapse the stock market in general, or if it's causing lots of trouble, which is inflation for everyday average American. We have seen inflation rising in the past 2 years. Then Federal Reserve was doing quantitative tightening, meaning they're pausing the rate, they're sucking all the money out of the economy. They turned the vacuum cleaner on, sort of, and they sucked everything out of the economy. And then that's how they control the inflation. Then if they keep doing this, of course, it's going to cause recession. And why does recession happen? Because when you're sucking money back from the economy, then you're not printing new money, the rates are higher, it's hard to get loans from the banks because nobody wants to borrow at 6-7% interest rate. Then demand goes down on products and services because people cannot afford the products and services. As a result, the companies can keep lowering the prices of their products and services, but they can only lower the price to a certain extent, because if they keep lowering prices, then they cannot even meet the manufacturing cost of the products, and they cannot afford to provide the services cheaper if they have to pay a certain amount of salary and pay their bills on top of that. So having said that, then companies start laying off their employees because there's not that much demand for their products and services. there's nobody needed to manufacture more products, because people aren't buying that many products, and the one they already had, they're just sitting on their shelves, and they can only lower the price to some extent, and after that they have to pause lowering the price. So as a result, they lay off their staff, which means so many people lose their job, and as a result, economy collapse. People's buying power goes down. The businesses shut down eventually because they're going in losses, which cause recession. And this vicious cycle continues. So to avoid recession, then Federal Reserve has to go back and lower the rates again, so people can borrow money at lower interest rates. There's more inflow of cash in the economy. People's buying power goes up, and ultimately businesses stay in businesses, employees keep their jobs, and economy keeps on going. After that, once the inflation goes higher, the cycle begins all over again. And that's what Federal Reserve has been doing for decades now. So what's going to happen now? Of course, some members of the Federal Reserve are of the opinion that there should be more than 25 basis points rate cut in October and December, because they don't think 25 basis point rate cuts is enough, which kind of is concerning a little bit. I know the market, especially the retailers, are very enthusiastic, and they're happy the rate cut is bullish for the market, which it is bullish for the market, but if it's cut for the right reasons. If they're going to do sudden hefty rate cuts, that means they're behind, and that's why now they're cutting rates more aggressively. If they're doing 25 basis points and they're hoping that it's a smooth landing, then a soft landing rather, then that means economy is in good condition, and stock market and economy and the public should be happy. Now, of course, Federal Reserve Chairman Jerome Powell has been data dependent, so to speak. And if you watch this channel regularly, you know I've been saying the Federal Reserve is 2 to 3 rate cuts behind. And why I say this is because they have been looking at inflation data only. They have not been taking into consideration some of the other aspects of the economy. And even inflation data, there are so many categories which define if inflation is going higher or going lower. And I've been saying the Federal Reserve is behind, they should start cutting the rates. And that's what we're seeing now, because some of the members of Federal Reserve are of the opinion that 25 basis point rate cut is going to be very slow. They should do more rate cuts. And rightfully so, I think they should do more rate cuts. I understand if Jerome Powell had not seen the labor market decline, he probably would have not cut the rate even at this point, because he was mainly looking at the inflation. And inflation was not going higher. The only reason why inflation was high is because there weren't that many houses being sold in the market. There weren't that many buyers for the houses. And the reason there weren't that many buyers of the houses because the interest rates are so high. Ultimately, the housing prices was going on because the supply was low, and also the shelter prices were going higher because there weren't that many sale, purchase, and new construction of the homes, because builders are not able to sell their homes. So ultimately, the shelter cost goes higher, which is like the rental cost goes higher. And that was mainly the main reason why inflation report always showed that inflation is still high. They had to look at at least categories of this entire report and see which categories show high inflation report and which categories show the inflation is under control and we can have smooth landing, and they should have started cutting the rates earlier. However, now that they have started cutting the rates, I think in this recent meeting that Jerome Powell had in Philadelphia, it kind of showed his body language, his tone, and his dovish attitude showed that he understands that he may be behind and he should do cut rates more aggressively. So at this point, is market expecting, or is the economy expecting a rate cut? Absolutely. Stock market, financial analysts, economic analysts, they're all expecting probability of 97% rate cut in October, which is going to take place on October 29th. And there's another rate cut that's going to take place on December 10th. So they're expecting 2 more rate cuts by the end of the year. Now, it's a different question how much, what the percent they're going to cut. Whether they're going to do 25 basis points or 50 basis points. Right now, the economy, the financial analysts, the banks, and the stock market is pricing in 25 basis rate cuts in October and December, respectively. what's going to happen after they start cutting rates? So I think right now, Federal Reserve is in the process of quantitative easing, means they're going to cut rates. I know in September the rates were 4.25 and they were planning on bringing it down to 3.5 to 3.75%. So let's take the higher figure. Let's say they want to bring it down to 3.75%. So in order for them to do that, they'll have to do 2 more rate cuts. So they already did one in September, one in October, and one in December. That will give them 3/4 basis points of rate cuts. Now, they have to do that will bring them down to 3.75%. But if they want to go back to 3.5%, they will have to cut a little bit more. Either they can do maybe 50 basis points in October, or they can do 25 basis points in October and 50 basis points in December, or they can just wait till next year. And then I think in next year, 2026, the Federal Reserve is going to turn their money printer on, and they are going to print more money. And why I say this, because Jerome Powell took some time to talk about balance sheet in his last meeting that took place in Philadelphia. And that's what gave me the hint, oh, you know, we're going to expand the balance sheet. Is because they understand that there is less cash in the economy. The interest rates are so high. Housing market is collapsing. Economy is collapsing. Stock market is kind of holding back. I know on the surface it looks like the stock market is doing great, but remember, stock market is running on retailers right now. All the savvy investors, the financial institutions, the large investors, they are holding their money back. I was actually reading a report a couple of days ago, and it says there's still $8 trillion sitting on the sideline, means in money markets and stuff, which has not been invested into the stock market. That means Tom Lee often says this is the most hated U-shaped or V-shaped recovery. And he says this because he doesn't think that people were expecting this recovery to be so quick, and people were waiting on the sideline. They were holding the cash, but stock market kept going. And I think it's the retailers which are driving the stock market right now. So having said that, if market is pricing in rate cuts in October and in December, also if the Fed chair is dovish, then why was the stock market collapsing today? I'll give you the reason why it was red today. The stock market was collapsing today for 2 reasons. One of the member of the Federal Reserve said that they need to cut more rates. 25 basis point is not enough. That kind of concerned the large institutions and big investors to kind of worry them, like, why are they talking about aggressive rate cuts? That tells us that maybe they are behind and there is going to be no soft landing. That's the reason why all the institutions and large investors have pulled their money out. And every time large investors, large institutions or ETF fund managers, they pull the money out of the stock market, retail just step forward and they just gobble that dip up right away. And that's what's been happening. Retailers are very bullish and they think Fed cutting rate is going to be good for the market. Yes, if it was cut for the right reason, but I think if they're going aggressive, I feel like Jerome Powell finally realizes and the Fed members finally realize that maybe they are a couple of rate cuts behind, as I have been saying on this channel. And that's what concerns the investors and the stock market. And that's why the market was red today. Would it stay red? Probably not, because there are lots of people, retailers particularly, who are waiting on the sideline to buy some of the good quality stocks which they missed out on. Like myself, I'm waiting for Nvidia, Palantir to drop so I can buy those, because I know I have been waiting for them, but then market just kept going up. And now that I see that, okay, maybe large institutions are a little concerned, I think with them selling large quantities of those good quality stocks will give me a buy the dip opportunity. Whether it will be a good decision or not, only time will tell. I know in the short term, it might not be the best decision, because if large investors keep pulling their money out, these stocks are going to keep going down. But I think if I want to hold these for next 3 to 5 years, I think it'll be still a very good time and good price to buy those stocks. Similarly, there are lots of other retailers who are waiting on the sideline to kind of have a pullback on some of their favorite equities, so they can go ahead and start a position then. And that's probably what's going to happen. In the short term, the stock market is going to be pretty volatile. There are going to be lots of fluctuations, ups and downs, because Not only that Jerome Powell's decisions affect the market, but also the government shutdown doesn't help, and Trump's tariff talk with China has a huge impact on the stock market as well. If you have noticed, the Chinese stocks have been going down recently because, of course, when we have problem with China, of course, it doesn't sit well with our companies because we have a huge amount of product manufacturing that takes place in China, and we import everything from China. I've been saying this, that Trump has gotten himself into this trade war with China without having a backup plan yet, once again, which is crazy. This government is just idiotic, and they always do this. So, having said that, what's my plan? I think in the short term, market is going to be pretty volatile. I feel like it's going to lead to the Christmas year-end rally eventually. That's what the financial analysts have been saying for past 3 years. And I've noticed that every year when I'm expecting a Christmas rally in the market, it's always red. So maybe this time is different. I don't know. But I feel like Jerome Powell is slow. And I think that's what's concerning the investors in the stock market, and that's why the market is red. And I feel like government is ready to turn their money printer on in the early 2026. And for the next towards the end of the year, they're going to have 2 more rate cuts. Now the question arises whether it's 25 basis points or 50 basis points. That's obviously up to them. So on the positive note, I will keep recording my videos, keep giving you my update. I hope you liked my perspective. And I'm not making up stuff. It's actually true that we are living in a very terrible era where we are making history, and we are making a bad, negative history, and we're leaving a shit show for our coming generations, unfortunately. Excuse my language, but I hope this video helps. Give my video a thumbs up. Until next one, take care, be careful. Don't gamble on your hard-earned money. Invest wisely. Until next one, bye.